Hi, welcome again to today's edition of Market Analysis for today, the October 19th. I'm Giovanni Benacourt, trader and analyst with Vantage Markets. Well, there is a massive amount of cash on the sidelines right now as markets suffer through extreme bouts of volatility and investors remain skittish. Today, we're going to be taking a look at Bank of America's monthly survey of fund managers to see what's going on and what investors' cash positions can tell us about what the future might hold for the stock market. Investors' cash pile is the largest since April of 2001. Now, why is that significant? Well, according to Bank of America's fund manager survey, it screams capitulation. But what is capitulation? Simply put, capitulation is the slippery slope that starts when the market starts going down and continues to fall for some time. The October survey screams macro capitulation, investor capitulation, and crucially start of policy capitulation. The survey shows that cash as a percentage of portfolio stands at 6.1%, a 21-year high. That's compared to a long-term average of 4.8%. But what does this mean? Investors are nervous. They're holding more cash to avoid deploying it into terrible volatile markets. The capitulation part of this suggests that this survey respondents think that a bottom may be in, and their next move, will be to deploy all this cash they've amassed while markets were under stress. Which brings us to the next part of Bank of America's prediction that this cash pile will fuel a rally in 2023. There is a saying, big low, big rally. Now, when the Fed cuts become consensus, referring to the long-awaited pivot by the U.S. Central Bank away from the big interest rate hikes that have battered the stock market this year, a big low is still coming in, which could cause the Fed to panic. For the time being, investors should be looking out for signs of another bear market rally if Treasury yields stay below 4%. The 10-year note on Tuesday was yielding around 4.05%. Now, we have been hearing this is a bear market rally, which is when stocks stage a brief and often large upswing in the middle of a larger bear market or decline of at least 20%. Yesterday, the S&P 500 was down about 22% from its record closing high. It hit early January. Like many bear market rallies, the current surge is driven by what could be a temporary burst of buying activity. Investors have sold vast amounts of stock as the market has plunged this year, so they already have large sums of cash to put to work. So perhaps that is what we are seeing today in the markets. Now let's take a look at the markets. And so therefore, we can see how yesterday the market rally, it fluctuated right around above our pivot point. It hit our 11,400 resistance level, and then it has retraced. RSI is still neutral, and we could probably see today this continuation of the sell-off into the day. So today, I'm thinking we're gonna be seeing a sell day in the markets as well as the S&P 500, which right now is really just making equal highs and equal lows. So that is ranging out of this market. Most likely, obviously, it will come out of it, and the consensus for today will be the downside to the downside. Meanwhile, crude oil has broken our support level. I am going to bring it up to $80. Now, there's news about President Biden, tapping into his special petroleum reserve of 15 million barrels. So those are going to be coming into the market. So let's see when that will happen. Obviously, today we're going to be seeing the consensus about the inventories of crude oil. So anything that inventories are higher than 1.4 million barrels per day will obviously give the market some breathing room, and we perhaps will see crude oil prices fluctuate towards the $80. Now, anything below 1 million barrels, let's say the same as last week, which was about 900,000 barrels. If we see something like that, then we could probably see a nice rally to the upside. above to the $89, $90 price target. Okay, and as far as crude as Nat Gas goes, well, we are coming down to the low of July, so that's probably is going to be met. So keep that in mind. Okay, let's update our resistances. Right, gold. Gold is now trading lower as the dollar index is trading higher today. So we will probably see gold come down to 1600, just a psychological round number. Silver will follow suit, and then we're gonna use this low of August for silver, and then we're gonna bring down our levels. This is my resistance here. Then we are looking at Bitcoin and the dreaded winter. Bitcoin winter. We could probably see a continuation of this sell-off into the 18,800 level. So keep that in mind. The euro, it had a nice attempt run yesterday towards the 0.99, trying to get back up to the parity, but the dollar index said, no, you're not gonna get that high. Here I come, and it brought it back down. So we're gonna be using 0.97 as our support. Then we have the US dollar, Canadian dollar. I have it here because we're gonna be seeing some fluctuation in this currency as the inventory comes out. And then we have here the dollar index. Let's update to 113, about that. That's our resistance, and we're gonna have 112 as our support. All right, that's our levels for today, and I think the whole scenario is looking for the markets to start a sell-off back into this bear market. So keep your eyes open and cover your positions. Have a nice day.